Welcome to The Power of Tax Defense Attorneys, Tax Corner with Juda Gabaie.
Welcome to Payroll Taxes Demystified, what every business owner needs to know with Juda Gabaie. I'm your host, Abigail Vaca, and I'm joined by Juda Gabaie, expert tax attorney of Gabaie and Associates, LLC. Thanks for joining me today.
Thank you, Abigail.
My first question for you, Juda, it seems payroll tax issues are often misunderstood. Can you explain what payroll taxes are and why they're such a critical aspect of a business's tax obligations?
Yes. So how payroll taxes work is like this. The government entrusted the employer to withhold payroll taxes for the employees. So that includes withholding tax. That includes Social Security, Medicare tax. Those are actually the employee's money that the employer withholds and then remits to the government either weekly, biweekly, monthly. It all depends on how often their payroll is and how much that payroll is. But essentially, the employer withholds it from the employee paycheck and remits it to the government either weekly, biweekly, or monthly.
And what are some of the most common payroll tax problems that businesses face? And how can they impact the company and its owners?
So the most common issue that employers have with payroll tax is that if financially the business is not doing well, the employer may not actually remit those payments to the government. So what they would do is instead the employer would use that money to run the operation of the business. So essentially, the money is doesn't belong to the employer. It's actually the employee's money. So it's more like a theft. And what happens is if you miss even one quarter, it'll start snowballing because then you'll miss the next one and you're always going to try to catch up to try to fix it. And at that point, that's when the IRS will get involved. Usually they'll try to get involved right away and they will attempt to possibly even go after the owners or the secretary or partners of the business for those payroll taxes. So individual owners or members or partners or secretaries could be responsible for those payroll taxes that weren't remitted to the government.
So there's a domino effect here.
There is a huge domino effect because, if you miss one quarter, most employers will attempt to fix up that quarter and then try to catch up on the next quarter. So you're always catching up. And the goal is, if you miss one quarter and you only have a certain amount of funds, just be current. That means if you just did payroll and you withheld taxes, that taxes should be used for right then. It should be paid for that payroll. It shouldn't be paid for the last one. Try to keep up and stay current and not go back and try to and catch up, because then there would be a domino effect.
So what are the legal consequences of failing to pay payroll taxes, both for the businesses and the owners, which you touched on a bit?
So the consequences for failing to pay the payroll taxes or even file the payroll tax returns is that obviously the business is going to have a liability. A special agent revenue officer will be assigned to the case where the IRS will attempt to try to lien the business and try to collect that money. The IRS will attempt to go after the members of the company. It could even be a secretary. It doesn't even have to be a member of the company. If somebody signs a check or the name's on the bank signature card, the IRS can try or attempt to go after them too and hold them responsible for that payroll tax. It's actually called a trust fund recovery penalty. So the IRS will attempt to go after the owners of the company, the secretaries, for this liability. And once they go after the individual, then they can touch the individual's assets and income.
So in your experience, how do payroll tax problems usually escalate? And what early steps can businesses take to prevent significant issues down the road?
Payroll taxes usually escalate once an employer misses one quarter, and then they're moving to the next quarter. And during that second quarter, they're trying to catch up for the first quarter. Lo and behold, they haven't even paid the second quarter yet. And now it's growing much larger and bigger. Our advice generally is when a business has failed to file or pay, let's assume their first quarter, and they're now in their second quarter, we advise our clients to be current. For now, just pay your current quarter. And if you have extra funds, we can come back and address the quarter that you did not file. But for now, you want to be current to stop the bleeding, to show the IRS that you're not having any more payroll tax liabilities moving forward.
What are the options available for businesses facing payroll tax problems?
There are a number of options available for employers, for businesses that fail to pay the payroll taxes. There's an option of an offer in compromise, which is a settlement. There's an option of a payment plan. There's different types of payment plan that an employer can attempt to qualify for. And then if an employer is financially not doing well, then there is the option of currently not collectible, which is a hardship status. Basically tells the government that you don't have the ability to pay, and the government will put the payroll tax. They won't try to collect it from you for now until your financial situation improves, or until it is possible that your financial situation may never improve, and then the statute of limitation may pass and the IRS won't be able to collect it.
So just to clarify, is there a way to negotiate with the IRS to resolve these issues?
There is a way to negotiate with the IRS to resolve. There is always a resolution. The question is going to be, what resolution does a business qualify for? And whether that's going to be an offer in compromise, whether it's going to be a payment plan, or whether it's going to be a hardship status. We'll know more once we have a better idea of what the liability is and what financial situation is the business in.
Sure, that makes sense. So it's not a one size fits all.
Correct.
So how can businesses work with a tax attorney to avoid or resolve payroll tax issues before they become an audit or collection nightmare?
So working with a tax attorney is really your best option. One that specializes in payroll tax issues. Usually one of the first advice that a tax attorney will tell a business owner is, can you be current? Try to be current with the quarter that you're in right now. And we could address those old quarters depending on what your financial situation is like. At that point, we could see, okay, is this business going to be a settlement? Is an offer in compromise? Is it going to be a payment plan? Is it going to be a hardship status? As long as you're current, we can keep the business open and we can negotiate. We have leverage to negotiate with the IRS on the back taxes, which is the back payroll tax.
Okay. And I'd love to end. I have two more questions for you. What advice do you have for businesses that are currently behind on payroll taxes? What should they do first? And how can they protect themselves from personal liability?
The first thing they should do is be current. That's your leverage. Be current with your payroll tax right now. Forget about, if you can't afford the back ones, forget about the back ones right now. Focus on being current to show the government that you're stopping the bleeding. And then to avoid personal liability, there is something that we could do, and that is called a trust fund recovery penalty, possibly paying that portion of that trust fund to avoid the IRS coming after them personally for that liability. However, if they're unable to pay that trust fund amount, then there are options such as a settlement payment plan or a hardship status, or currently not collectible status. But there are options always out there for business owners and individuals.
And would you like to end by sharing any wins or success stories?
We represent so many businesses. A recent business that we represented was, fell behind many, many quarters. It wasn't their fault. It was they were under the assumption that their accountant was resolving this, was paying all the quarters for them. They were running their business. They were a multinational company in the US, pretty much in almost in every state. And they were under the assumption the accountant was doing all this information. But lo and behold, a year passed by, the accountant wasn't doing it. And the taxpayers at that point, or the business owners, were trying to catch up on the old debt, but then they weren't being current. They retained our office and we told them, hey, look, be current. That's the most important thing. Once they became current on the old back taxes, we were able to get their financials from the business owner and discuss a resolution with the IRS. And we were able to do a settlement on their back taxes that they owed to the government. They owed somewhere close to around $1 to $2 million. And we were able to settle with the government for about 100 and some change to the government, about $100,000. And we cleared them, and they're now current, and they have a good accountant that making sure they're all current and they're making all their federal tax deposits.
That's incredible. Nice work.
Thank you.
Well, thank you for joining me today. This was great information. I really appreciate your time.
Thank you.
Thank you for listening to Payroll Taxes Demystified, what every business owner needs to know. To connect with Juda, visit reliabletaxattorney.com. And don't forget to leave us a comment, like, subscribe, and review wherever you listen to the podcast. We love hearing from you.
Thanks for watching. Be sure to hit that like and subscribe button and leave us a review in the comments.